What's up, y'all? This is my strategy that I use. I learned from TJR. Um, People call it smart money concepts. You call it whatever you want. So part one, first part, there's liquidity sweeps. Liquidity sweep. Number two is break of structure. I'm gonna get into all of this. Number three, fair value gap. Number four, order block. Number five is equilibrium. All right, so first, let's go over liquidity. So liquidity lies above all highs and lows. All these prominent highs, there's liquidity above it. So when people enter shorts or longs, they're gonna place their stop loss under the low or above the high. And so since banks have such large orders, they need to push price below there so they can get their orders filled and go push price in the opposite direction. So let's find a good example. All right, here's a good example. So see how this area was a large push up and then price came back down and went just below it. And this caused a liquidity sweep. And you can see it just rallies from here all the way up. And it doesn't even have to be like a really big push up like this. Like even right here, there's liquidity above this. Price goes up above it and just pushes straight down. So you could find that above any high and low. I usually use it on the 15-minute and up. Below that, it doesn't work very well, but yeah. So after liquidity sweep, the next step is break of structure. So a break of structure is, let's say there's a liquidity sweep right here. It goes up and it makes a new high and it comes back down. So trends, an uptrend is a higher high, higher low, higher high, higher low. So when price breaks below that higher low or higher high, then that's a break of structure. So we can see here in this example, price comes up, makes a higher low, higher high, or a lower high, and closes below there. That means it's a break of structure. So in this example, we can see price is pushing down, making lower highs and lower lows. So this is a lower low. It comes up. This would be a lower high. If it would continue down, this would be a lower high, and then it would make another lower low, lower high, lower low. So since it broke above it, right here with this candle, right here, it broke right above this. So that means it's a break of structure. This is a 4-hour break of structure. I usually use it on the 5-minute. It also works really well in the 1-minute. And then right after that, after the break of structure, we can see there's a fair value gap right here. A fair value gap is a 3-candle pattern. So the first candle would be this one right here. This candle is the first candle. This is the second candle. This is the third candle. So we can see that when there's an opening in the wicks in the middle candle, that's a fair value gap. That's where price is likely to draw into, and there's orders that can get filled in there. So price goes into it. It doesn't close below it, because if it would close below it, it would invalidate it. So it goes into it and it has a large reaction. That reaction would be enough for me to enter, but you could also wait for an order block. This is an order block. An order block is the last, well, people do it differently. Some people only do the last candle, but the way I use it is the last move down. The last black candles, in my case, or red candles, or whatever color it is for you, is an order block. So this whole thing would be order block for me. You can see it comes out of it and it comes back in and it reacts out. And next would be equilibrium. So equilibrium sometimes doesn't happen. It's not required for me. I just use it as an extra confluence. Here there's a liquidity sweep. And I use the Gantt box. Some people use fib retracement. It's the 50% mark. So up here is a premium and down here is discount. They want to buy low and sell high. So it comes into this for a value gap, which is also in equilibrium. And then it breaks structure right here. So this would be my long position. I'll put my stop below the low and target any previous high. So you can target this. Probably not. That's a bad risk reward. But this would be a great target right here. 1-to-1 risk reward. And you can see it goes all the way up depending on what you want to target. So when you think about break of structure, that I use break of structure for finding daily bias. So this is the monthly time frame. The monthly time frame, I don't use it for daily bias. Some people do. So what I do is I go into the 4-hour. You can see today, right here was a break of structure to the downside. There's a black candle, a white, an up candle, and it broke the structure. Now it's no longer making higher lows. Now there's a lower low. So this would be a break of structure to the downside. So what you want to do is right before pre-market, you want to look at the most recent candles. So you can see make sure y'all follow, make sure y'all like the video. If you have any questions, drop them in the comments or DM me. I answer all DMs on Instagram. Make sure y'all join the free Discord if you want to learn more.